What's up, guys? Welcome back to another episode of Behind the Facade. I am your host, Gavin J. Gallagher, and on this podcast, I explore the mental and emotional game often playing out subconsciously both in your mind and the mind of everyone else in the real estate or property investment market. The key to success in this game is to master your mindset and behavior, to take control of your thoughts, your emotions, and most importantly, your ego. Welcome to the show. Guys, real quick, if you're serious about scaling your property investments, then you need to check out my Elite Property Accelerator. Whether you are stuck on raising capital or structuring deals, or indeed just finding the right opportunity, this is the blueprint you need to take your portfolio and your finances to the next level. No fluff, just real world strategies that work. So guys, hit the link below. It says learn more, and I shall see you inside. What's up, guys? Welcome back to another episode. And this being Wednesday, we have a guest interview to tell you about today. And so this was a conversation I really enjoyed. Andrew Reichart is the MD of a company called Berggo Capital. And Berggo Capital is based in Pittsburgh, in the US, and they've raised 4 funds, and I think they've raised over 125 million for projects and a lot of syndication. But what's really interesting in this conversation is just Andrew has some great insights into building a team, and he's a little bit like myself, all into the personal development side of things and the mindset and all this. And so this is a really interesting conversation. I really enjoyed this conversation. And so I think you guys are going to too. So without further ado, my conversation with Andrew Reichart. Andrew Reichart, welcome to the podcast.
Hey, thank you so much for having me, Gavin.
Andrew, you're in Pittsburgh today. There's a lot of international audience members here listening in. For those of them listening that haven't heard of you, why don't you give us a little elevator pitch? What is it that you do?
Sure. Well, first of all, what I do is I'm a husband and a father to 3 girls. So that is a big part of who I am and what I do. But professionally, I also have a private equity real estate company. We raise capital from investors and buy apartment buildings in 4 states here in the United States.
Okay. Which states?
We're in Western Pennsylvania, Western New York, Ohio, and West Virginia.
Okay. Interesting. And tell us, what I like to do with my guests is to kind of take us back to the beginning. Like, what brought you into the real estate world in the first instance?
Oh, wow. That's a great question. And if you don't mind to unpack that, I'd love to just maybe tell you a little bit of my story.
Yeah, do, please.
So, I grew up in kind of the Philadelphia area and one of the suburbs of Philadelphia. And actually in high school, had a bit of a rebellious childhood, but always had this entrepreneurial edge to me. So unfortunately, I was using my entrepreneurial edge to do things that weren't quite legal here in the United States. So ended up getting expelled from high school.
Cool.
So after I got kicked out of high school, was very fortunate and got accepted into college and moved out to Pittsburgh to go to college. So that's how I ended up in Pittsburgh. And then it was really in college that I started reading a ton and applying myself when I had really not applied myself prior. And one of the books that I read that really changed my life was this book called Rich Dad, Poor Dad.
Oh, wow.
So it's like the purple Bible for real estate people. So, it talks a lot about mindset there. And that's why one of the things I love about your podcast is you talk about mindset, something I think is super important to be thinking about and talking about as professionals. And I realized that I just kind of had this poor dad mindset. And it was in the book that I started thinking about what does it mean to have this rich dad mindset. And they talk about entrepreneurship and they talk about investing in real estate. So it was in college. I read every book on buying real estate with no money down. And because I had no money, and it was like I had no money, no experience, no credit. And the year I graduated from college, I bought a duplex again, with no cash. I actually walked away from closing with $20,000.
Oh, nice.
And so this is before the great financial crisis, which I know you've been through and you've got the scars to prove it. You know, the banks were doing crazy things in '07, which is when I bought that duplex. And that's how I got into real estate.
That's excellent. Yeah. I mean, the thing is one of the things about mindset that I found is that for every person who went through 2008 and has awful scars, there's the other side of it where there's people that picked up the most incredible bargains. And I know my home that I was very proud of. I had built this big house in a beautiful neighborhood here in Dublin, and it was worth over 5 million when I was living in it. And then in the worst of the crisis, the banks forced me to sell it, and I had to sell it for 1.5 million. Oof. And I mean, it was absolutely the lowest point in the market. And that's when they decided, like, it's time for you to sell this. And of course, you sell it, and if you have any debt on it, that becomes residual debt that you've got to kind of carry, or else you can trigger a bankruptcy. And I was keen not to go bankrupt. But you go through these, like, there's so many people that I know that went through that and talk about how dreadful it was and what an awful time. But then the flip side of that is that there's people that were in the right place at the right time, that had cash to buy, that did not have to go off and look for debt because it wasn't available at the time. And somebody went and bought the most magnificent house for half the price that it was. And so that is out there. And if you have that mindset, you can easily switch that back on and say, do you know what? There are opportunities out there no matter when you are in the market. It's just a matter of identifying them and finding.
Oh, it's so true. And even thinking about those two scenarios, one where maybe you took your lumps and got some scars, and the other where you were able to have an opportunistic perspective. I really love this quote from Nelson Mandela. He says, "I never lose. I either win or I learn."
Yes.
And so one of the things I've realized is even those scars that we took, they've built, hopefully, a sense of resilience in each of us. And so there's always these market cycles, and how can we build the muscle of resilience and be able to prepare ourselves well for the next time something like that happens. And that's one of the things I've tried to take out of the great financial crisis, is really just, hey, what did I learn? What did I learn from this, and how can I improve next time?
I think you're absolutely right. And that's one of the key messages I try to get across, is just resilience. And it doesn't matter what stage you're at. Like, it's fine. People might think it's fine for you, Gavin, to say, have resilience because you made it through and, the crash. But there's a lot of people out there who are just consider themselves down and out now because of what they went through. And but there's other people that went through the same and worse. But because of the resilience, they've actually come back, and they've come back stronger.
Yeah.
And so it's really important that but the other thing about resilience, and I have some members of the family that actually took their own lives because of the terrible financial strain that they went through. And I know at least a dozen people that were well known in this city that went through the exact same thing, and they lost their identity when they started to suffer financially. And to go from the flash car and traveling around in helicopters and stuff, and then suddenly you're bankrupt or whatever. They just couldn't hack it. And one of the biggest things about resilience, I think, is just, it's so important that as an investor, you just recognize that the industry has this cyclical nature.
Yeah.
And no matter how good you are, there will be a moment when you got it wrong, or the market turned when you didn't expect it, or something like that. And it's just natural that you're going to experience that. It's not that you made a grave error. It's just that events can take place, like, the 9/11 attacks on New York City, COVID. There can be an event that nobody predicted that will have a dramatic impact on the market.
Yeah, it's so true. And one of the things I think about, just kind of hearing you talk, is I've tried to develop this perspective of actually being grateful for that adversity. So 1 year into being married, I actually got diagnosed with cancer. So here I am, newlywed, and they're telling me and my wife, that we might not be able to have children because of the kind of cancer that I got diagnosed with. And a lot of people would look back at that and say, wow, what a horrible experience. But as I look back 10 years later, I find myself actually grateful for having been diagnosed with cancer, because what it did to my mindset and allowing me to count every day as important. And so when you think about things like the cyclical nature of real estate and the reality that everything we have today can be gone tomorrow. I mean, it's just a good reminder. It's like, hey, look, we're building something, but it could be gone tomorrow. So how am I living today with intentionality? That's something I ask myself every day.
Yeah, I think that's a great philosophy. And as well as that, I mean, whatever about your investment, but the reality is the person that was killed in a car accident, yesterday or the day before, they probably didn't have any idea that it was the last day of their life at that moment in time. And like, we are literally one accident away from it all being over. And so live your life and really enjoy it,
Yeah, totally agree.
Andrew, let's go just in terms of, that's how you got started in real estate. Let's move forward then to, you've created Berggo Realty, and tell us a little bit about, first of all, the idea behind setting up a company in the first instance. Like, what was the catalyst?
Yeah, it's a great question. So I never really sought out to say, hey, this company that I have today is what I want to build. What I really wanted to do was, first of all, invest in real estate myself. And so I started investing in real estate myself and really loved everything about it. The thing that I loved is, so our mission at Berggo is improving lives through real estate. And so I view real estate as a means to an end, with the end really being the lives that we impact along the way. So I found myself leasing units to people, and I'm like giving a person a new home, and they're all excited about moving into their new home. And I was like, oh, I love this. I'm like impacting this person's life. It's where they're raising their kids, and, where they go home to every night for rest and solace, and like really cool to get to be that person's landlord. And so I just, I built up a portfolio of 20 units that I had myself. Again, had no money. I was borrowing all the money in the early days. And then after I got to 20 units, that was when I resigned. I had a great full-time job at a bank at the time. And I resigned from that job to basically ask myself the question, okay, now how can I take what I've been doing for myself and help other investors get to experience the same thing? So I just started working with a couple one-off investors and small limited partnerships, got to 100 units, and then launched a private equity fund, raised $17 million. That was another 800 units. And the rest is history. We've raised $125 million US across our 4 funds at this point, and we've purchased 3,600 units with it.
3,600, wow. That's a lot of doors. And tell us, like, when you first started, I mean, the first fund is probably the hardest, I would have thought. What was it like, that first fundraise? Tell us about that.
Yeah, so the first fundraise I think is always kind of the hardest, right?
You're unproven.
We're unproven. And so what are
record to be decided? Yeah.
No track record, exactly. So what are people really investing in? They're investing in us, right? They're really investing in me as a person. Do they believe that I'm a person of integrity? Do they believe that I'm a person that's going to do what I say I'm setting out to do? And so we wanted to really align our interests with our investors in that first fund. And so structurally, we set it up so that we only win when our investors win. A lot of other private equity companies have a lot of fees. Ours was very fee light and very performance driven heavy in that first fund. And then I'm personally guaranteeing the debt on the real estate, investing right alongside our investors in our fund. So that first fund really was more me being a partner with those investors and just bringing them into what I had already been building.
In terms of time frame, when was your first fundraise?
2015, we launched our first fund. Our goal was to raise $10 million. We launched it in November of 2015, and we ended up raising $17 million over about 18 months.
Okay. Nice over performance there. 70% oversubscribed.
Exactly. It was awesome.
And tell us, what area of the market were you particularly focused on then? Has it changed?
It has changed. Boy, I'll tell you what. In the early days, I was doing a little bit of everything. So buying single family homes and kind of renovating them, buying small multifamily 6-unit, 12-unit properties, buying commercial real estate. And within commercial, we're buying office and retail. We were even doing some third-party management of commercial real estate. We're doing commercial tenant fit-outs, like a separate construction group. I mean, just all over the place. And that first fund, 2/3 of it ended up being multifamily, 1/3 ended up being commercial. In 2018, we read this book called Traction and implemented EOS, the Entrepreneurial Operating System. And we said, hey, look, we've got to focus on one thing. And for us, that one thing is multifamily, about 50 to 150 units, Class B workforce housing in the heartland. And we said, hey, we think that this is our sweet spot. And we stopped buying everything else and stopped doing everything else.
So focus. It's all about focus. It's just...
Yeah.
And that way you become expert in that area. You know what to look for. You can find all of the problems straight away because you've seen it so many times over and over.
Yeah, and I tell people, hey, look, there are a million ways to make money in real estate. Just pick one, because I was doing 10, and it doesn't, like, honestly, in one sense, it doesn't even really matter what that one is. Just get really good at that one thing.
Yeah, hopefully it can scale. That's the main thing.
For sure.
One of the things that I found over the years of building my own portfolios is that there's a kind of a growth limit, and you get to a certain size and where you're running around like a headless chicken, and it's kind of like, unless it's at a certain scale, it's very hard to build a team around that. And so you did the private equity and syndication and things like that. Yeah. And what kind of, like, in terms of building a team out, like, what were your first couple of hires?
Oh, yeah. It's so funny you asked that question, because I would have done it very differently, having, had the benefit of hindsight right now, with the exception of one, which my actual first hire, quote unquote, was my wife. And so that I would have still done the same. She, in 2014... December 2014, she resigned from her job to come work with me. And it was that exact month that we found out I had to go through chemotherapy for my cancer. So the benefit there was we just started working together. She was with me in the hospital 5 days a week as I was getting chemotherapy. We got to work side by side. And I couldn't imagine not doing that again. Like, doing it with her side by side was the best decision ever. But then what I ended up doing is hiring different functional folks. So, like, hire a maintenance person to do maintenance, hire a property management person to do property management. But what I ended up finding is that I was still doing kind of everything else. And I've actually learned that the two most important hires, which are my two direct reports today, are an executive assistant and a chief operating officer. So I am just uniquely positioned to be more of a visionary, sales is what I did for a while, like that kind of thing. And I was trying to do all of the operations, but man, if I had just hired an operations person earlier on, I think that would have made a world of difference. And then the other thing is I was still doing so much administrative work, to actually have had that administrative assistant or executive assistant in those early days would have really been helpful as well.
Yeah, it's interesting. I've been reading a book recently called Buy Back Your Time by a guy called Dan Martell. And he talks about the hiring, what he calls the hiring ladder. And it's the different functions that you should kind of think about first. And the first one is the PA, or the executive assistant. And he explains why. And I kind of think it makes such sense. You mentioned there EOS and the book Traction. Tell us a little bit more about that, and what did you implement?
Yeah, sure. So it was 2018. I picked up that book, and the basic premise is every company runs on some kind of operating system, which an operating system is just a way of organizing human energy. So the question is, how are you organizing and directing human energy in your organization? And, the picture is you can have human energy kind of going all different directions, or you can get everybody focused and going in the same direction. And so these 6 components of the entrepreneurial operating system, we realized we were really weak in each of those components in 2018. And so just one step at a time, started to build strength in each of those by getting our team aligned around our vision, by getting the right people in the right seats, by getting our scorecard with our data really set up well, and then really like executing on all of those as well. So those are really some of the key foundational aspects of that operating system.
And presumably, Andrew, throughout your last 9 years in business, you've made some mistakes that you look back on and you go, I won't do that again. I mean, can you shine a light on any kind of area that you've learned and you kind of not to play in that area?
Oh, yeah, I could probably, honestly, I could name 1,000. And the reason for that is I make mistakes every single day. So at the end of my day, I look back on my day and I do this little practice called examine, where I look back on my day and I say, wow, where did I get it right? And where did I really blow it? And I'll look back on my day and I'm like, oh man, I really blew it there. So every day there's an opportunity for learning. If I had to pick just one, I think it is the importance of the right people in the right seats. And, that we really focused on that through EOS, but that's actually a concept that came from Jim Collins with his book, Good to Great. And the idea is you need the right people, you need them in the right seats, and then the bus will take you somewhere great. And I think what we often were doing in those early days is either finding people that we felt like were the right people, like core values fit, or, maybe they were a good fit for the seat, but not like both. And what I realized is you have to both have this really strong core values fit, and you have to have a person who gets it, wants it, has the capacity to do the job, really has the competency to complete the job that is required of them. And the reality is, just as we grew from 0 to 100 employees, we outgrew people.
Yeah.
And so I think we just ended up holding on to people in those seats for way too long. And the seat outgrew them as our company grew. And it's always hard for me, but I think you have to have those difficult conversations to say, hey, this is just no longer a good fit for you.
Yeah. That's one of the toughest decisions as you scale a business, isn't it? It's like that the guys that got you there, who showed you loyalty getting you there, but then the skills have just become, they're kind of holding them back at this stage. And so it's being big enough to recognize that. And then in your case, it's the difficult guy to actually have to pass on the message because nobody likes to hear that. I can imagine. And over the years, I've experienced the same kind of thing.
Hey guys, if you're listening to this and thinking I'd love to invest in property, but I don't even know where to start, well, I've got you covered. I am launching the Property Starter Pack on the 1st of March. It's designed specifically for beginners. There's no jargon. There is no overwhelm. It's just a step-by-step plan to buying your first property, whether that's your home or an investment property. You want to do that with confidence. And here's the kicker. The first 100 people to pre-register are going to get an exclusive early bird discount. And so I've put a link below to register your interest. And so find that in the show notes below and secure your spot. Now, back on with the episode.
Is there any light bulb moments that you consider, in your career where you suddenly kind of went, oh, wow, that's like something that really is probably the most valuable learning that I've had?
Yeah, well, we talked about a couple already. I mean, the importance of focus would have been one of those light bulb moments. The importance of right people in the right seats would have been one of those light bulb moments. The importance of a really, really good second in command chief operating officer,
COO,
COO would have been one of those things. The importance of a really good executive assistant. I had to go through a couple to get the one that I have now. She's just amazing. So we've talked about a few already. If I had to pick another one, I'll tell you what it is. I think that ownership dynamics are really hard. So one of the things we've had to work through, whenever you're a co-owner with somebody, you're like married to that person.
Yeah.
And just like you invest in your own marriage, you've got to invest in those relationships. So me and my business partners, we've basically done the equivalent of couples counseling for years and years and years, and just really being intentional about investing in those relationships. And the big aha there is, the golden rule is treat people the way you want to be treated, but the platinum rule is treat people the way that they want to be treated. And in order to do that, you have to know them. So it's the importance of both knowing yourself and knowing that other person and investing in that relationship. I think that's been another big aha for me.
And I'm curious, I mean, since COVID started and a lot of people started working from home and working remotely and stuff, you mentioned that what people want themselves and how they want to be treated. And one of the things that I'm seeing is that a lot of employees, certainly in this country, we're seeing a lot of employees want to work from home and they don't want to come to the office 5 days a week. And there's a certain dynamic that happens in the office that is beneficial to the business. And I can understand why people don't want to travel to the office, but at the end of the day, it's not necessarily optimal for the business. Are you finding that in your business?
Yes. And here's what I think when I think about that question. I think there isn't a level at which you need to, kind of treat people the way that they want to be treated. And I think that there's also, I think about my kids, and sometimes you have to say, hey, look, I know what's good for you, and I want to do this because I think that this is actually what's best for you. You may not agree with it. You may not want to do this. But I believe that this is what's best for you. And so I think some corporations are taking that perspective when it comes to requiring people to work from the office again, even a couple of days a week. It's like, hey, you may want to work from home 5 days a week, but we as an employer actually believe that that's not the best thing for your mental health and your physical health and your emotional health. And we think that you being in human interactions in an office, in a conference room, is a good thing for you. And so I think you have to extend grace to people and give them some time to realize that and to adjust. And so that's what we're trying to do. We're also just, we're a flexible organization because, basically, if you look at our workforce, about a third of folks work from home, about a third work from the office full time, and about a third are some hybrid in between. And because we're in the property management business, some people are, they're visiting properties, they're out and about.
On-site, yeah.
Exactly. So I don't want to take what we do and prescribe that for folks, but I think every company's different. You just have to know your own company's culture and your own people. And I think both companies will have to adjust a little bit and employees will have to adjust and kind of meet in the middle somehow.
Yeah, no, the reason I asked that question is that I think I mentioned to you before, I run a commercial portfolio and we have a number of office buildings, and it's really tough in post-COVID world is, I listen to you talking about your multifamily portfolio and I'm envious because it sounds like a lot easier time than we're going through, because a lot of office buildings, there's guys that say our workforce are almost all working from home. We just don't need the amount of space that we have. And so they hand back either a couple of floors or the entire building. And then in other cases, the whole area of ESG has caught up now, and older office stock is no longer as popular as it was, and people want all the mod cons and they want the environmental footprint and stuff. You guys, I was looking at your website and I saw an article about ESG and stuff. How is that impacting your multifamily portfolio?
Yeah, that's a great question. So ESG has certainly started to get more attention in the past couple of years, which I think is a good thing. Interestingly enough, the principles behind ESG have just always been in our company's DNA. So, we have always felt like in order to do well, we want to do good. And so the concept of social impact, our mission is improving lives through real estate. Like all we think about is social impact and like how can we improve people's lives. And even, I mean, in the early days, we started a nonprofit to help our residents with financial literacy.
Okay.
I mean, we just have done a little bit of everything to, to really just improve people's lives that are in our sphere of influence. So it's always just been in our blood. And I do think that the concept of a double bottom line or triple bottom line is a real thing. We found that when we love our residents well, and when we even care for the environment well, that those are things that actually produce better return on investment. So by taking care of our residents well, we have lower turnover, and therefore we have better net operating income as an operator. So better return on investment for our investors. Even some of the environmental things. So we have some pretty older vintage properties. To answer your question, some of our properties are 1970s vintage, 1980s vintage, and we're doing simple stuff like going through and replacing bulbs with LED bulbs and replacing toilets with EPA WaterSense toilets, which is here in the United States, a way in which you can reduce the water cost and water usage of your toilets. So just those little things save money at the property on utilities and save money for the residents. So I think you just, for ESG to work, you have to take a long-term perspective.
Yeah.
You have to be thinking of, look, we're investing for the next 10 years, 20 years, 30 years, 50 years. And that's how we think of things. Now, we might not always own the asset, but we want to treat the asset as if we will always own the asset. That's how we think of it.
And getting into that, actually, like what would your typical horizon in terms of a fund be?
Yeah, so our first two funds were 10-year funds, and we just actually found that was a little too long.
I was thinking that when you
Yeah.
said it. Yeah.
Well, what we found is that in years 5 through 10 of a 10-year fund, the capital expenses just become so much more unpredictable. So while you can, in the first 5 years, predict pretty easily, like you do an inspection and you're like, all right, we're gonna have to replace 5 furnaces, we're gonna have to put a new roof on, whatever, right? In the first 5 years, you put a plan together, you reserve capital expenses for it, and capital for it, and you do those capital expense projects. And then in years 5, 6 through 10, you have all these surprises. And so we've moved to all of our hold periods are 5 years.
Okay.
Now at the end of 5 years, we make a decision. We re-underwrite the property and we say, do we want to own this, do another 5-year cycle, or do we want to sell it, on the market, or, what do we want to do? And so we have a couple options at the end of the 5 years. We don't have to sell them, but at least at the end of the 5 years, we're forcing ourselves to make that decision. That's
a good way to do it. All right. Yeah. Because we've had the same situation where one of the problems that we found actually in our case with our portfolio is you have a 5 to 7, we'll say, hold period in your kind of predictions, but then at the end of the 5 or 6 years, you're in a poor market cycle, and it's kind of like, okay, we don't want to sell in this current market, so let's just wait until it comes back and it's improved and stuff. And then it starts to improve, and then you kind of say, okay, well, things are going well now, let's hold on to it for a few more years and we'll see some upside. And then you hold on a little bit too long, and then suddenly you're back into the down market, and then it turns out you've been holding on to a property for 20 years.
Right. And I think you got to give yourself a little flexibility for that, right? Like, the last thing you want to do is make a bad investment decision because you're forced to do so. So I think having a little bit of flexibility there is important too.
And what advice would you give to somebody who is looking to raise money from investors? I mean, have you got your 3 core tenets that you would promise an investor?
Yeah, I think raising money, well, first of all, I think you got to make the decision, do you want to raise outside money? I think there is some appeal to that, but anytime you raise outside money, it's a double-edged sword. You have to recognize that it comes with strings and requirements, and you got to be ready to steward somebody else's capital. So first, really take a good hard look at yourself and, ask, do you want to do that? Second, I think that it comes down to the how. And I think the how, a really important piece of that is integrity. I talked earlier on about when we raised our first fund, people were investing in us as people. And so I think it's just important for you as an operator to be totally transparent and a person of integrity that says, hey, I'm going to sink or swim with you, investor, and here's how. Here are all the ways in which I'm aligning my incentives with yours. And that's what we did. And then I think third, I would just say viewing it as stewardship as opposed to them being just a number or capital. I think it's easy to say, I'm trying to get capital to buy this real estate or whatever. But at the end of the day, you're stewarding somebody else's hard-earned money. And, we view that as, hey, we treat it like our own money. I treat it like it's my own day in and day out. So
I think that's the key thing is just to treat it like it is your own, and then you'll marshal it as carefully as possible.
Yeah.
And how do you view the market at the moment, Andrew? Like we're coming through a period of relatively high interest rates, and now it looks like we're heading into kind of a lower interest rate cycle. Do you think that's going to drive up real estate prices in the sectors that you're in?
I think it might. Yeah, it's interesting. We debate it all the time internally because, there's supposed to be a correlation between cap rates and interest rates. But things don't always work out that way. And we're always a buyer. And so we've been looking for good deals and not really seeing them here in the US. And then interest rates are kind of anybody's guess. We were expecting them to be higher for longer. And then, price cut came and they were expecting more price cuts and they didn't come. And it's just it's almost like gambling at this point. I think where we are, honestly, is I'm not a market predictor. And what we try to do is just, plan for the worst and hope for the best. And so we take a very conservative posture. When we borrow debt, we borrow long-term fixed rate debt. We're not guessing on interest rate movements. We want to lock it in, remove any interest rate risk, and that's our conservative posture as an operator.
And in terms of like buying an asset, you see something, do you look at it as something that you can just lock away and you have a return on investment, or are you looking at adding value and making improvements?
Yeah, typically in today's market, we have to add some value. Back in 2015, 2016, 2017, we could acquire cash flowing assets easily and do almost nothing, and they would appreciate and they would cash flow, and we're looking really smart. But all we're doing is buying real estate and holding it. Today it's just so much harder. Any deal we buy has some hair on the deal. There's some challenge with it. There's some reason that we're getting the deal. And usually that is some value add plan, whether the market, rents are just below market, or we need to go through and renovate each unit, or there's some level of distress with the seller's loan and we're bailing them out of that. There's something that we're doing that is adding some value to the project.
Yeah, I think nowadays there's not as much value to be found, and so it is essentially the only way that you're going to grow the portfolio. Andrew, you've written a book.
Yeah.
Tell us about your book.
Yeah, sure, I will. So it's called Priorities on Purpose, and it is really a book about alignment. And when I say alignment, I mean personal life alignment with your own personal priorities and purpose. And so the book came about, if you don't mind me just kind of sharing a little bit of the history of it. Yeah. We as an organization, we're big on the Rhino here at Berggo. Rhinocerality is actually one of our core values. And the thing I love about the Rhino is it is a picture of resilience. So it has this really thick skin. And if you just look at my story of being expelled from high school and diagnosed with cancer, I've had some adversity in my life. And the Rhino also is a picture of alignment. It's charging at a target, but it aligns itself squarely at that target as opposed to just charging all over the place. And so at our company over the past really decade, my life has been building out this operating system. So just like we run on the entrepreneurial operating system, EOS, as a company, I run my life on the Rhino operating system, which ROS is the acronym for that. And that's just, I've developed that over the past decade of living my life, aligning my life with my personal priorities, my personal goals. And so for the past 2 years at our company, we've been teaching this system to our employees. So we've got 100 employees. We're teaching the employees this life operating system. And so we just took all those principles and put it into the book. So that's really what the book is all about.
And give us a couple of those principles, just as an example.
Yeah. So there's 5 principles. First of all, it starts with who. So the who component is all about understanding your unique DNA. So never before been created, never again going to be created. What is unique about you as a human, as a person? The next component is why. So the why component is all about understanding your purpose. And your purpose really comes down to a lot of things, which is, we call them life priorities. It's really understanding, what is your purpose as, in my case, as a husband, as a father, as a business owner, as a podcast host, whatever, and then you get to the what. So you get the who, the why, and then the what. And the what is the combination of your purpose, your passions, and your proficiencies. So that's what are you good at doing? What do you like doing? And does it align with your purpose? And then the last 2 components are how and when. How is all about executing rhythmically. Once you've identified what you're supposed to be doing, execute rhythmically on that. And when is all about optimizing energy. Energy is our most important resource as humans, and it's about taking your energy and making sure you have rhythms of work, play, and rest.
And so give us, this is actually right up my street, Andrew, so I need to get a copy of this book.
I got you.
The area, energy, for me, it's funny, and there's an additional reason why I brought health and fitness into my priority list. And it was in 2008, everything is going to shit around me, and I'm really, it's literally, it's like death by 1,000 cuts. You just, every day there's another email, it's another bank making some sort of a demand. And it really started to kind of work on my mindset, my psyche and stuff. And I kind of thought, what can I control? Because I can't control circumstances here. And it was suddenly fitness. I can become the fittest mofo that there is around, and that was literally the way I looked upon it, is this, that, nothing else, all of this other stuff is out of control, but I can at least control that. And what I found was I had such energy as well because of it, the endorphins you get from exercise, things like that. Tell us what you do for, to boost your energy.
Yeah. Well, Gavin, now you got me all excited. So we could probably talk about this for way longer than we have on the show. But So in terms of circle of control, let me just talk about that real quick. One of the other books changed my life in college was The 7 Habits of Highly Effective People, Stephen Covey. Yeah. And he talks about the circle of control, and I talk about that all the time. So we have our circle of influence and our circle of concern, and it's okay to be concerned about things, but we have to ask ourselves the question, what can we actually control? And I even was talking to my team about we had a big election here in the United States just this past November. You may have heard. Yeah. And I said, hey, look, the outcome of the election is in your circle of concern. You could probably influence it in some way. Maybe you could be campaigning or be involved. But what can you actually control? All you can really control is your own vote. But when it comes to the circle of control, I was telling people there's so much you can control, like your mindset and the words that are coming out of your mouth. Are you speaking love? Are you speaking grace? Or are you speaking division and hatred? Yeah. What can you be doing to unite people in this? And you can focus on, meditation. You can focus on your physical body. Get out there and work out. I was telling people, now having been diagnosed with cancer, I am also a health and fitness freak. So when I got diagnosed with cancer in 2014, I read this book called Miracle Morning. Oh yeah. I know.
So Hal Newport, isn't it?
Yeah, Hal Elrod actually.
Oh, Elrod, that's it.
And Newport is another great author. But yeah, and Hal actually super generous. He gave me an endorsement for the book, as did Michael Hyatt, who's also one of my heroes and developed a lot of the materials that have changed my life. So I read this book and I started doing these miracle morning savers. So silence, affirmations, visualization, exercise, reading, and scribing or journaling. And I do those 6 things every morning. They're all in my circle of control, and they allow me to start that day having already accomplished so much of what I can control. So to answer your question, it's a long answer, but those are some of the things that I do that are in my circle of control that just help me start my day with that mindset of, I've already accomplished some things that I can control.
Yeah. No, I totally get it. You're speaking to the converted here,
Yeah, exactly.
So Andrew, I'm conscious of time. Tell us if people wanted to learn more about you, your book, your business, where can they best find all that?
Yeah, so the book is rosjourney.com. So that's ROS as in Rhino Operating System journey.com. And you can learn about the book there. We've got a course. Developing an app should be out in January. So just trying to come out with materials. Just so you know, I wrote the book to the former version of myself. Andrew, who was just drifting and lost and needed direction. And I hope that the book will, I think about my daughters, help them to prevent some of the mistakes that I made. And so just trying to develop as many tools as possible to help other people prevent some of those mistakes I made. So that's rosjourney.com. I'm also pretty active on LinkedIn, so you can check out Andrew Reichart on LinkedIn, follow me, connect, whatever, and would love to, connect with you folks as well.
I'll put all those links in the show notes. And tell us, Andrew, final question. You are now a man of wisdom, lots of experience in your life. What advice would you give to your 20-year-old self if you had that conversation?
Oh boy, well, I just wrote a whole 150-page book on it. So if I had to boil that down into one piece of advice, it would be know yourself and be yourself. Because I think, 20-year-old Andrew did not know myself very well and was trying to be somebody that I really wasn't. And so know yourself and be yourself.
I think that's great advice, because so many young men, they are following that path of trying to be somebody that they really aren't, but they feel like they have to put on this kind of show or behavior or bravado or whatever it is. So great advice. Andrew, an absolute pleasure. I really enjoyed our conversation today, and wishing you guys in Berggo Realty the best of luck.
Gavin, it's my pleasure. Thank you so much for having me on.
Thank you for tuning in to another episode of Behind the Facade. If you enjoyed the show or found it useful in any way, could I please ask you to take a moment to leave a review over on iTunes or Spotify or wherever you listen to podcasts. There is no algorithm for the podcast, and so the only way we can get other people to find out about it is when it's shared by you. So if you can do that, it'd be great. If you have any questions or topics you'd like me to cover on future episodes, please connect with me via the school community, or just send me a message on Instagram or wherever. You'll see the links in the show notes below. You can stay up to date with all of my content and the projects that I'm working on by signing up for my weekly newsletter, and you'll find a link below in the show notes for that too. That's all for now, guys. I will see you back here same time next week.